Hey everyone, welcome back to Corporate Decoder. Today, Functional Brands Inc. filed a Form 8K reporting on a shareholder meeting, and we are seeing a major corporate action that could change the stock's landscape. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just got shareholder approval for a reverse stock split, a move that often signals trouble but can sometimes be a necessary evil. So what exactly happened here? Functional Brands Incorporated held a special meeting of its stockholders recently, and the key takeaway is that the shareholders gave the green light to two important proposals. This meeting took place on the 1st of June 2026, and it was a big deal for the company's future direction. Let us dive into what these approvals mean for Functional Brands Incorporated, or MEHA as it is known on the stock market. The first major item was the approval of an amendment to their certificate of incorporation to allow for a reverse stock split. Now, what is a reverse stock split? Imagine you have a lot of very small pieces of paper, say $100 bills. A reverse split is like taking all those $100 bills and trading them in for a smaller number of larger denomination bills, like a few $1,000 bills. In stock terms, this means the company will reduce the total number of its outstanding shares, which in turn increases the price per S-share. Companies usually do this to artificially boost their stock price, often to avoid being delisted from major stock exchanges, like Nasdaq. The board has the power to decide the exact ratio, which can be anywhere from a 1-for-2 split all the way up to a 1-for-250 split. This gives them a lot of flexibility to determine how much they want to increase the share price through this move. Let us look at the votes. A significant number of shares, 4,492,117, voted in favor of this reverse stock split. However, there was also considerable opposition, with 3,361,162 shares voting against it, and 21,031 shares abstained. Despite the opposition, the proposal was approved because it received a majority of the votes cast. Historically, about half of micro-cap companies that go through with a reverse stock split eventually end up delisted. For instance, Kodak did a 1-for-20 split back in 2021, and its stock eventually faced delisting. If you had held $1,000 worth of stock before that split, you might have seen its value drop by an additional 40% in the following 90 days, turning that $1,000 into about $600. This is a trend we often see with companies struggling to maintain their stock price. The second major item on the agenda was the approval of the Functional Brands Incorporated 2026 Equity Incentive Plan. This is essentially a plan to give stock options or other equity awards to employees and executives. It is a common tool for companies to incentivize their staff and align their interests with shareholders. This plan also received strong support, with 4,613,683 shares voting in favor. There was also some opposition, with 1,527,837 shares voting against it, and a notable 1,732,790 shares were marked as broken non-votes, meaning the broker did not have instructions from the beneficial owner to vote on this particular proposal. Like the first proposal, this equity incentive plan was also approved based on the majority of votes cast. This suggests that the management and a good portion of the shareholders are looking to reward and retain talent within the company. Signing off on this report is Eric Gray-Pentrog, the Chief Executive Officer, on the 1st of June 2026. Looking at the broader context, Functional Brands Incorporated currently has a market cap of about $4 million, with its stock trading around $0.07. This is a very low price, which explains the need for a reverse split. Recent news headlines suggest the company is also involved in an acquisition of Bullion FX Alchemy, a move that could potentially transform them into a blockchain finance player. This acquisition might be the underlying reason for the reverse stock split. Perhaps the company wants to present a more substantial share price as it enters this new venture. However, the history of reverse splits, especially in companies with such a low market cap, is often a precursor to further struggles. It is a way to stay listed, but it does not address the fundamental business challenges that led to such a low share price in the first place. The risk I am watching is whether this reverse split and the entry into blockchain finance will actually revitalize the company, or if it is just a cosmetic fix before a more significant downturn. My biggest concern is that the core business may still be weak, and this move is more about delaying the inevitable. What I'm actually looking for is consistent improvement in their underlying financials, not just a manipulation of the share price. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, subscribe, and join our Discord.